President Trump declines to rule out whether his tariff plans could plunge the US into a recession. The president said in an interview with Fox News that tariffs on Mexico and Canada could even go up. Canada's new Prime Minister, former Bank of England Governor Mark Carney, in his acceptance speech told Liberal Party members that this won't be business as usual when dealing with President Trump. Well, Jane Sydenham is investment director at Rathbones. Jane, do you think a US recession is now more likely as a result of President Trump's trade policies?
I think the odds have increased. Inevitably, when there's uncertainty, markets and businesses don't like uncertainty. It tends to make them delay decision making and planning and investment and so on. So I think it has increased the odds. Yes.
Now, it's fair to say that we've had a fair bit of seesawing when it comes to tariff announcements. How's that impacting on the markets, in your opinion?
So I think that hasn't gone down well either. I think there's a sense that the policy is being made literally daily, and of course, again, that comes back into feeding into that sense of uncertainty that markets don't like. There's no. It doesn't mean that we're going to have a recession, but it has to add to the uncertainty and just makes investors a little bit unsure as to which path we're taking.
But generally, this has been quite good for European equities compared to their US counterparts. Is it about time European equities caught up?
I mean, the really interesting thing about this, of course, is sometimes the law of unintended consequences, and Trump is obviously trying to make Europe pay for that trade surplus they've got, but in reality, that combined with what's going on in Ukraine and the fear of a Russian army without the checks and balances that the US provides means that Germany has absolutely stepped up and is really investing huge amounts of money in arms and infrastructure for the future, which potentially changes the growth profile for the next decade.
Well, you mentioned Ukraine there. Well, EU finance ministers will discuss later today how to pay for defence through new joint borrowing, likely to be as much as 150 billion euros. How do you see this impacting on the bond market? So far, they don't seem to have really reacted.
No, and certainly when we go back to last week and the German bond market, the yields rose by more than any other point in the last 30 years, but not, I think, for negative reasons. I think there was a sense that money is being invested in necessary growth and investment, and that was greeted very positively. And equally, other announcements from other European economies could well be treated in the same way.
And we've seen quite a reaction with some of the defence stocks as well in Europe. Are you expecting that to continue?
Well, so far, Rheinmetall is the new Nvidia, isn't it, in terms of the way that it's been behaving? I mean, it's nearly doubled. Whether or not that will continue, it's interesting today. There's a little bit of profit taking. Markets are a little bit calmer, but nevertheless, with a runway for investment over the next decade, then that's certainly going to drive share price performances and improve the outlook for all of these companies.
And that was Jane Sydenham at Rathbones. And don't forget, you can get more videos on Reuters.com.